Welcome back to the LPR Trading Group YouTube channel. It's Dave again. I've got module 2 for you guys on our market profile or TPO little mini course here. In module 2, we're going to talk about day types. Now, some of these day types I don't reference at all. I will talk to them or talk about them a little bit just to give you guys an idea of what's all involved in each of these day types. All right, so day types. We've got normal days and normal variation days. Normal days are typically post-early news. These days have aggressive and quick moves off the open before balancing out and two-way trading the remainder of the session. Normal variation days, which is a day that I don't pay much attention to because I don't love trading on these days to begin with. They typically open slow with a tighter 30-minute or 1-hour initial balance range. Directionality comes later in the session. This could be due to midday news or an afternoon eco event. Let's pop over to normal and normal variation days here. So normal days on the left-hand side, you guys can see that we've got an initial balance that is formed in A and B period, and we've tested the highs of the value area here and the lows of the value area here, trading sideways in a tighter balanced or consolidation range. So we just trade within value off of these initial balances off the open. Normal variation day, this isn't the best example. I would like for this move to be a little bit later in the day, but this is a tighter initial balance range before we exit the range, and then we end up building value and trading within value. So normal variation for me is just a smaller initial balance, and then we get a move outside of the initial balance before balancing for the day. Normal day is a little bit larger initial balance range, and we sort of do the same thing. We chop back and forth. This example could be more of a trend reversal type day, but this is why I kind of stay away from normal variation type days in my everyday trading. The next day type is a trend day. This occurs when the open price forms the high or the low of day. So essentially the market is going to open. Within a few ticks, it will just drop and never revisit the open price, or it will open within a few ticks, it will rally to the upside, and it will not come back to revisit that open price. Large directional conviction and heavy participation from the big players to move the market to their desired price. This is a trend day. So if we can see back from our first module, we learned that this green dotted line was our open price. So you can see A period open. We went one tick over the open, and for the rest of the day, we one time frame to the downside, okay? One time framing. This is a new term we're going to talk about here because this happens a lot on trend days. What is one time framing? If you take A period high, A period low, B period high, B period low, you can see that A periods or B periods high is lower than A periods high, and we're trending down. You look at C period high, it's lower than B period high. D period high is lower than C period high. Lower, 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 lower. So we've one time framed essentially in one direction on this day for 1, 2, 3, 4, 5, 6, 7, 8 periods. Now, the way I look at one time framing is at some point in the day, you're likely going to get a time frame, like this one right here, that will sweep the high of a previous time frame. As long as that one time frame still holds, we get one period of a sweep, and we continue one time framing to the downside. We can call this whole day a one time framing day. Now there will be instances where you will see the market one time frame down all day with no sweeps. My preference is midday, we get a sweep. Why? Typically in the market, the morning session is price discovery or directional trading. If the market picks up large momentum off the morning, it's going to move in a given direction. So if we look at the time here, A period we know is our 9:30 to 10 o'clock candle. So this is 10 o'clock, 10:30, 11, 11:30, 12, 12:30, 1, 1:30, 2 o'clock, midday, late day. We typically get deeper pullbacks in the market before we continue to choose a direction. This could happen earlier. Typically this will happen around 11:30, noon, but it's not unusual to see this happen at 2 o'clock if we're one time framing. So I would still consider this whole day a one time framing day. We only had one period sweep, which is healthy midday, and then we continue to the downside on this trend day. We'll look at our next day type here. It's a double distribution day type. These days fall into the trend day category with a slight variation. Double distribution days typically hold a tight initial balance range off the open where accumulation or distribution is taking place depending on where we're sitting in the overall market auction. Once the auction is resolved, there is a swift one time framing move to the upside or downside that is met later in the day with more balanced two-way trade. Let's check out and see what a double distribution day looks like. So if we look at the open, this is a period open here. So we've got 9:30 to 10 o'clock, 10:30, 11, 11:30. So if we look at the first 2 hours of the market open here, we were in a balance range and price was holding this balance area. Once the auction resolved itself, price began to drive to the upside, and we started to one time frame to the upside. For the afternoon session, we found ourselves again in a balance range. So the key to identifying a double distribution day, both before and after, before we're going to look for tighter initial balance ranges. This could result in a non-trend day or a double distribution day. So if we're going sideways like this, we could be in a no trade non-trend day, or we could be accumulating positions on the bigger picture to get a large move directionally. If you're looking at the profiles after the fact and trying to identify these days just for reference and learning, a double distribution day is going to have a distribution on the top side of a range with a thin middle body and a distribution on the lower side of the range. It's going to look like an uppercase B. We've got two areas of distribution within the profile. These are some of my favorite days to trade because using footprints along with market profile, within this range off the open, we can typically see, for example, C period gets below B period, but instantly drives back into the range. So it's looking like price and participants are trying to hold the initial balance low here. They're not wanting to see below low of day. We could get a lot more information on the footprint to dive deep into this trade. Overall, these are probably my favorite days to trade. I like catching this imbalanced move, and then once we get back into balance, we can exit our positions. The next day type is going to be a neutral day type. This is not a day type I may pay much attention to, as the rules, they're just a little bit too messy for me, and really, I think there's too many day types to begin with, so we're just going to keep it simple and really not go on about neutral day types. The next day type is a non-trend day. These are flat days in the market that usually come before large economic events like CPI, non-farm payroll, OPEX, FOMC, contract rolls, or half days in the trading market around holidays. Lack of participation, smaller initial balances, and thinner volume are all indications of a non-trend day. So if we look at this day right here, I believe this was around New Year's of 2024. So we look at this day here, we have our A period open, and we kind of just oscillate within this range, right? You can see this very tight range. We've made some very poor highs here, and we're trading within this very small value area. So this is a non-trend day, right? The market does not want to accept outside of the range, either because of lack of participation, thin volume, or just, yeah, like I said, no one is trading. It also does not want to move out and hold the lower part of this value area to find any directionality to the downside. So overall, a non-trend day is just lack of volume. So if you feel like the price is moving very slowly, it's very thin, and we're not really moving in any good direction around a holiday, big news event the next day, or that afternoon, you could probably find yourself in a non-trend day here. We will go back to P and B shape profiles here. So these profiles set up typically when there's an aggressive move early in the session, followed by liquidation, distribution, balance at the top side or the bottom side of a range. P-shaped profiles signify short liquidation. B-shaped profiles signify long liquidation. Note that P and B-shaped profiles are very similar to trend days, as these profiles typically one time frame for a few periods. Let's go over to the B-shaped profile. So B-shaped profile, we've got a period open right here. Price drives to the upside before falling off a cliff, failing to accept the highs. These are all buyers that get jammed up into this trade here. And then there's a mass liquidation of the long side. Price one time frame to the downside before balancing out and forming this lowercase b-shape profile. Okay, so longs try and take the market to the upside. At some point they fail. It looks like we failed here off of a value area high or low from a previous session. We fail. We start moving to the downside. The stops for longs start tripping out. Shorts start hitting the market, and the market comes down, and then we balance out inside two-way trade. P-shaped profile, very similar here to the B-shaped profile, but obviously flipped on its head. Market opens down here. We try and drive to the downside. Shorts cannot drive price lower. There's failed acceptance lower. Price starts rallying to the upside. Shorts start covering. Buyers start buying. B period opens. We one time frame for a few periods before we chop sideways and essentially make this uppercase P-shaped profile. Going forward, if you have a day that has formed a P or a B-shaped profile, it does not always mean that because we formed a P-shaped profile, the next day is going to be bullish. If we formed a B-shaped profile, it doesn't always mean the next day is going to be bearish. The important thing is, let's see or monitor where the next day opens. If the next day opens outside of value and we can retest value, hold, this could be strong. If the next day opens below value, you've got to be cautious about being really hungry about longs. The same thing with the B-shaped profile. If you are monitoring a B-shaped profile from a previous day where the longs got really jammed up, we need to see where the next day opens. If we're opening outside of value, can we revisit value, hold below value, and continue trading lower? This is where we really have to judge the market auction and where we can use previous profiles in order to identify what we're going to do in the upcoming days. All right, guys, we'll end Module 2 there. Module 3 is going to be normalities and anomalies in the marketplace. We will talk about that in our next video. As always, like, comment, subscribe. I hope you guys enjoyed the content. If you guys have any questions, put them down below. I will get back to every single one of your comments in the comments section. Trade safe. Have a great day, all. Cheers.